Hi everyone! So today's presentation will consist of 7 instruments. The first one is introduction, followed by quantitative analysis such as return on equity, debt ratio, return on asset and earning per share. Moving to the qualitative analysis that will be presented by Shawani and Aiman. Last but not least, the conclusion of the financial performance of Maybank will be presented by Izzati. To start off, what is Maybank? Maybank is Malayan banking berhad that was established in Kuala Lumpur on 31st May 1960. I'm sure everyone here has dealt with Maybank, whether through online transaction or in person at one of their branches. Worth to mention, Maybank is the largest company by market capitalization on the Bursa Malaysia and 4th largest bank by asset. The founder of Maybank Berhad is Kutek Puat, while Dato Abdul Farid alias is the current CEO of Maybank Berhad since 2013. He has been with Maybank through ups and downs for 8 years. Not to add, Maybank has consistently set new benchmark in product and service delivery by achieving many firsts in the industry such as rural credit scheme, card service, investment banking, internet banking and Islamic banking. The group also had branches operational in numerous parts of Malaysia as well as Singapore, Brunei, Hong Kong and London. Other than that, they also start providing Islamic financial service in 1993 and transformed into full-fledged Islamic banking activities on January 1st, 2008. Maybank Islamic Berhad was founded because the firm sought to promote Islamic investment and financial product management such as Ijarah Mutahiyah Bitamlik. On the side note, there are several forms of Ijarah Mutahiyah Bitamlik financing that reflect the different modes of transferring the ownership of the asset, such as gift, sale and transfer of equity claim from the lessor to the lessee. The objective of this financing is to transfer the legal title of the leased asset to the lessee at the end of the lease period. At the end of this contract, the bank will surrender its ownership of the asset to the client in consideration of the total accumulated rental claim that is inclusive of the profit. Furthermore, the reason why Maybank provides Islamic banking is because Murabahah commodities item will have actively participated. In general, we will discuss the performance analysis of Maybank Islamic Berhad through quantitative and qualitative analysis in this report. So, I'll pass the next slide to my friends.
Next, we move to the return on equity ROE. ROE is calculated by dividing a company's net income by its shareholders' equity found on the balance sheet. In other words, return on equity represents how good the company is in generating returns on the investment it received from its shareholders. Due to the COVID-19 pandemic, we saw a slight fall in Maybank Islamic net profit to 3.8 billion, down 12.63% from 4.4 billion in 2018. Referring to the table stated, for 2018 and 2020, the return on equity was 41.08% and 31.98% respectively. By looking at this data, we can compare the performance of the bank over the years and we found there's a decrease in the percentage of ROE, which is 9.1%. A higher ROE percentage suggests that Maybank Islamic is more effective in generating profit from its existing asset in 2018 than it would be in 2020.
So moving on to the second quantitative method for Islamic banking, or we can say that Islamic bank. So we use the debt ratio method. So in a simple definition or in their formulas, debt ratio is the total debt divided with total asset. So debt ratio are being used to measure how is effective of that industry of that company to liquidify their debt. Meaning that for $1 asset, how much debt can be used to liquidify or can be solved. So, in other compared to other ratio, debt ratio have their own benchmark. And hear me out. So this benchmark can be vary depend on what industry that you have and what kind of situation that you involved. So for the financial industry, we have a benchmark of 1.0 it means that if you have higher debt ratio compared to 1, it means that you have a higher risk in that. Then if you have lower than 1.0, mean you can say that you have low risk of debt. But some potential investor might say that you have a low performance in creating a profitability. So that is a definition of simple definition of debt ratio. So using this kind of ratio for Islamic Bank for 2018 and 2020. So in 2018 we have a 0.9521, while in 2020 debt ratio we have a 0.9525. We can see that we have a slightly difference of 0.0004 point compared to 2 years, which is 2018, because we have a pre-COVID-19 pandemic, and 2020 is a year of during COVID-19 pandemic, which is totally about lockdown. So we can say that Islamic Bank can have a more secure, even though we have slightly increased for their debt ratio, because we know there was a lot of things happened that during that year. Most of their client, their customer doesn't have their income because they lose the source of the job, and the Bank Negara Malaysia have established a moratorium for about 6 months to help small businesses and other client or other customers. So even though we have a slightly increase of 0.0004, we can say that some Maybank still secure about their debt, and we can see that for about $1 can be used for about 0.95 debt, or 95% of debt. We mean we have after we have liquidified all the liability, we still has the minimum or the backup plan or backup asset, we have about 5% of the current total asset for Islamic Bank. So moving on to the third quantitative methods of Islamic Bank. So we use the return on asset. So in a simple definition of return on asset is an internal management to calculate how much profit that they get on every $1 of ringgit Malaysia that they spend on asset. So compared with the debt ratio, they have their own criteria, which is about 5% and 20% category. So if you have a 5% category, it means you are slightly average. You can see that you are gaining a moderate profit throughout the year, and if you have a 20% of return of asset, mean that you are really gaining a lot of profit during that year. So if we are comparing in 2018 and 2020, so in 2018 we have a 1.9694%, rather than 2020 we have about 1.5496%. So we have a decrease of 0.4% throughout these 2 years. So we can say that throughout the year, that during the year of 2010 we have faces a lot of challenges, and most of the company, other financial industry have their investment, their stock was declining, their price, their suku might become worse because people lost their job, people lost their income, and some industry need to fire their employees because they need to minimize their losses. So for Islamic Bank, we can see that they have managed to suffer a minimal loss. There was 0.4%, quite less, even though they faces the same crisis with other industry. So in separation for return on asset, if you manage to earn profit more with your current asset, it's quite good, because for a company their main basic is to generate profit, even though there is a low profit or high profit. But the most important thing is to generate profit. So that's why Islamic Bank managed to gain profit, which is about 1.5496, which is a little bit compared to the asset.
Earning per share is calculated as a company's profit divided by the number of shares that was outstanding. By looking through earning per share, a company can estimate their corporate value as they calculate how much money they make for each share of its stock. By obtaining a higher earning per share, a company can be said to generate more profit and have higher value, as investors only want to invest in a company that can generate more profit for relatively from its share price. To calculate earning per share, the net income, or also known as profit, must be divided by available shares. The table below shows the basic earning per share in 2018 and 2020. So in year 2018, the earning per share is 66.8 cents for every share, while in 2020 it was 53.1 cents for every share. This showed that earning per share for 2018 was higher than 2020. It can be said that the earning per share for Maybank has been decreasing by 13.7 cents per share for these 2 years. This showed that Maybank has made more profit in the year of 2018 in comparison to the year 2020. This will have further problems to attract investors, as the decrease in the earning per share was not a good or pleasant thing for investors.
Next, I'm going to present about qualitative analysis. Qualitative analysis is a subjective judgment to assess a company's worth or prospect based on non-quantifiable data such as managerial skill, industry cycles, R&D strength, and labor relation. Qualitative analysis is concerned with intangible in-asset issues that are more social and experiential than mathematical. The first qualitative analysis is Employees Upskilling Program. Maybank Group has kept its promise to its stakeholders by distributing value created in relevant and meaningful way, which includes beyond financial means for some stakeholder groups. In their effort to create more sustainable future, stakeholders get intangible advantages ranging from staff upskilling program to different community projects. As you can see in the diagram, the values created was distributed for the economy, for the employee, for the shareholder, and for the group's sustainability. In 2018, 2.55 billion, and in 2020, 1.95 billion was paid for the tax and zakat to the government, contributing to the development of Asian countries. And for the employee, which is the salaries and rewards to the Maybankers, in 2018 they spent for 6.45 billion, and 2020 it increased to 6.56 billion. And for the shareholders, it was the rewards of full year dividend, which in 2018 they spent for 6.27 billion, and 2020 it increased to 5.91 billion. And lastly, for the group sustainability, which is the investment via retained profit to fund future growth across their diversified franchise. In 2018, they spent for 1.84 billion, and in 2020, it decreased to 569 million. Next is qualitative analysis based on Islamic banking operation. Islamic banking is banking system that follows Islamic law, often known as Sharia law. Any transaction suspected of violating Sharia will be referred to the Sharia committee for review and determination of whether any Sharia regulation have been broken. Sharia risk management will keep track of the occurrence and its resolution, as well as timely reporting to the Sharia committee, the board, and Bank Negara Malaysia. Any Sharia non-compliance transaction will have their associated income cleansed by channel to an approved charitable organisation. For the financial year ended in 31st December 2018, there was one Sharia non-compliance event, which is non-execution of commodity trading prior to financial disbursement.
Maybank Islamic Berhad has established many rectification procedures relating to processes, legal papers and other control mechanisms to minimize recurrence of Sharia non-compliance occurrence, in addition to the purifying of income from Sharia non-compliance event. Well, for the financial year ended in 31st December of 2020, there were 3 Sharia non-compliance events, which are financing of prohibited activity, finance charges or monthly profit amount exceeded the selling price, and financing of Sharia non-compliant investment. The following action for the correction have been implemented by Maybank Islamic Berhad, which is for the financing of prohibited activity. The measures undertaken is by enhanced Sharia screening tool and staff awareness. And for the second event is finance charges or monthly profit amount exceeding the selling price. The measure undertaken is the refund of overcharge amount and system enhancement to cap the finance charges with the selling price. And last but not least is your the event of financing of Sharia non-compliant investment, and the measures undertaken is by enhanced existing Islamic initial public offering process flow. Next, I'm going to pass the presentation to Aiman.
Managing risk was important in order to protect the stakeholders while achieving a sustainable outcome for our company. By managing risk, the company can maximize their organization success and also reduce any risk of project going astray from what was planned. Because of the changing business landscape and regulatory environment due to globalization, Maybank saw geopolitical and trade-related uncertainties in 2018, a contributor to pressure on margin. Therefore, key strategic priorities were established so that the group's risk resilience heightens and can achieve group goals. One of the strategic priorities was upskilling non-financial risk practitioners through targeted learning modules, and the next one was enhancing technology to fight cyber and fraud risks. This was to make sure that they can manage exposure to operational risk effectively, and the action that was taken was to enhance the governance structure and risk capacity so that more effective and informed risk management decision making can be made, and also a new mechanism was developed and deployed. This mechanism allows a holistic view of risk and control by business line and sector. In 2020, Maybank has developed a comprehensive group-wide environmental, social and corporate governance (ESG) risk framework to understand how ESG risk can emerge, including any direct or indirect material risk. This will facilitate assessment on how ESG risk can materialize and the comprehension of losses that the group may receive due to the risk. Other than that, Maybank also developed a geospatial platform in 2020 with multi-layer and base map capability so that it will enhance the analytical planning and forecasting. This platform offers a more advanced tools and processes in assessing risk through forecasting and provision of business solution. These include aspects like floodplains, forest congestion, and major rivers.
To summarize all that has been discussed, we can see from the quantitative analysis that the return on equity percentage for Maybank Islamic in 2018 is higher than in 2020 because of the COVID-19 pandemic has caused the bank's net income to decrease. Declining ROE shows that the bank is becoming less efficient at creating profits and increasing shareholders' value. Following that, there is a tiny difference in the debt ratio, which is only 0.0004. Looking at this data, it appears that the Maybank Islamic was able to maintain its debt ratio while not surpassing the benchmark debt ratio of 1.0. Moving on to the return on asset (ROA), Maybank Islamic has a 0.4494% worse ROA in 2020 than it did in 2018. A significant amount of funding has been turned down for 2020. Since Islamic banking is significantly more secure than conventional banking, Maybank Islamic was able to limit its losses to a minimum. Besides, the earnings per share for 2018 were greater than in 2020, indicating that Maybank Islamic produced more profit in 2018 than in 2020. Meanwhile, for the qualitative analysis, we can look at the employee upskilling program. The Maybank Group honors its pledge to its stakeholders by distributing value in meaningful ways, including ways that go beyond financial means for some. Stakeholders gain intangible benefit from staff upskilling program to community projects in their efforts to create a more sustainable future. Next, in 2018, Maybank Group faced some Sharia non-compliance cases involving non-execution of commodity trade prior to funding disbursement. For this reason, Maybank Islamic Berhad has built several rectification procedures relating to processes, legal documents, and other control systems. Examples of corrective action taken by Maybank Islamic Berhad include improving the Sharia screening tool and employee awareness, refunding overcharged amounts, improving the system to cap finance charge with the selling price, and improving the existing Islamic initial public offering process flow. Finally, in the qualitative analysis, we can look at the risk management aspect. A firm can enhance its organization success and limit the risk of the project departing from what it was anticipated by managing risk. That's all from us. Thank you.